How I grew my family wealth from a $100,000 condo to over $200 million in assets and apartments. Let me show you. I'm Justin Brennan, multifamily investor. Before we get going, tell me, what is stopping you? Is it capital or is it finding deals? Which ones are your biggest roadblocks while you haven't started yet in the multifamily space and you may still be stuck doing nothing at all or in the single family world? Comment below in this video. I would love to learn more so we can put together videos that target those things for you. And also do me a favor, click and like and share this video so the algorithm will kick it off and allow other people to see it just like you. Let's go. So in 2010, right in the midst of the financial crisis, I knew we had to buy property. I was broke, had $11,000 in my bank account. I was sitting at a real estate conference. I was a luxury realtor at that time, but I knew we had to buy property because I was always told you always buy when there's blood in the street, even if it is your blood, right? So that was the moment, but I didn't have any money and I could have just stopped in my tracks right there, but I had a skill set. I had the ability to find good deals. I knew how to put them together, structure them because I had learned this skill set in the real estate world. I just needed to find somebody that had some money. And I want to break this down literally almost deal for deal, how we took it in 2010, one condo, $100,000 to where we're at today with over 1,200 units and $200 million plus in assets and apartment. And I'm going to show you exactly how we did it. Let's go. All right, take a look at my screen. So in 2010, we bought our first condo. It was $100,000. We put 25% down, which is $25K, took out a 75% loan, $75,000, and that was our first deal. It cash flowed, I think, at like 13%. I mean, it was like $585 per month. Not a lot of money, but percentage-wise, it was amazing. That was our first step in. Now, I would have done that over again. If I had to redo it, right? I would have done that same deal, but now I would have gone bigger. I wouldn't have gone into the next stage we did. I would have learned and said, let's scale this game and syndicate apartments. Become essentially a general partner that finds great deals, puts them together. We bring in some of our money and then we attract other people's money with it. Don't fear raising capital. It's a whole process for it, okay? I'll show you. But let's jump to the next one. 2011 comes around. We buy a triplex, 475 grand. We're still using all of our own money. We're not bringing any investors yet. So my partner brings in 125 grand. He gets a preferred return on that money. I'm bringing in the skill set. I'm running everything. I found it, analyzed it, put it together, property managed, rolling commissions. I put a lot of sweat equity into the deals because I didn't have the capital. He brought in the actual capital. That was our actual company that we started, Brennan Capital Group. So $350,000 loan, he signed on that. I couldn't sign yet. So now we have 4 units, condo and a triplex. Moved to 2012, we buy a fourplex, 525 grand. 130 down. No, I'm starting to bring money in because now I got some money. $395,000 loan. We take that down. Keep going. 2014, we buy another fourplex. 575, 140 down. 435 is our loan amount. 2016, another fourplex. Then we do another fourplex. Now we have a total of about 20 units, $3.5 million in assets, about a $1.2 million in equity amongst all of these deals. Now this is right in that 2016 range. We didn't do anything all the way up until about 2018, 2019. Now I'm going to show you what happened. We got comfortable. We thought, like we're cool here, but then we really wanted more. We just didn't know how to do it. It's like anybody. You're sitting there going, okay, will anybody invest with us? I didn't even understand the OPM game, other people's money. I didn't realize that if I went and found bigger deals, I didn't have to worry about the money. I had to worry about finding a good deal, putting it together, sending some stuff out and attracting the money in because everybody wants to invest in real estate. That is not your problem. The problem is finding a good deal, putting it together, and then having a trusted resource like yourself to invest with. The money will find the great deals. Trust me, everybody wants to invest in real estate. They just need a deal and a trusted resource. That is you. So let's keep going here. So here we are, 20 units, $3.5 million, $1.2 million in built up equity. Pretty good, pretty good. All with our own money. Now, if you want more and you want to grow this generational wealth, the financial freedom, all of this stuff, the massive passive income to overcome your current income that you're in, this is where the game really starts. Keep moving. 2018. What happened in 2018 was a bit tragic because we were comfortable, we were happy, but we wanted more. And I felt like we were playing small ball. And I wasn't willing at that time to take risks. But then something personally happened. We lost my sister, 2018, 46 years old, autoimmune disease. And I don't know if you've ever had anything tragic happen in your life, but it starts to make you reflect and realize, you don't know how long you got. It could be tomorrow, it could be next week, it could be 10 years, 20 years, you don't know. And the worst fear I had at that point, and even still today, is being 80 years old, sitting on my deathbed, having to have a conversation with my 40-year-old self right here, and having to tell that self, dude, I'm sorry. I'm sorry I didn't go for it. I'm sorry I was too chicken, you know what, to go for it. And so having that happen to me triggered me. And I said, I'm playing small ball, Justin. You got to step up. You know what you want. You got to go get it and stop playing the fear game. You got to learn this stuff and you got to go for it. And that's what triggered this. So we refinanced one of our first deals, a triplex, right? We purchased it for $475. It's now valued at $800. We take out a $600,000 loan, pay off our old loan of $350. We had equity in it, so now we pull out that $250,000, and that's tax-free money. Watch how this works. We take that $250. Watch what happens. 2019, we find a 27 unit out of state because we were in California, tough state to invest. Now we want our dollar to go farther. Here's how it goes. We find a 27 unit for $2.2 million in Kansas City, Missouri. We add in $250,000 in renovations to it, $150,000 in closing costs to close the deal, $2.6 million all in. We get a loan of $1,771,000. The property qualified for that loan. Remember, it's commercial real estate now. The property qualifies through DSR loan. The bank ensures the property can pay them every month, not you. You are secondary. This is why getting this loan is easier than a house loan of $200,000. So now we got the loan. Now here's the big thing, the equity. Most people stop. I don't have $830,000. I know you don't. Most people don't. We didn't either, right? Remember, we had $250. Now we bring in $80,000. This is our money in it. We're the general partner in the deal. We get 40% of the deal. We have 100% voting control and decision-making power to control the deal. 40% of the deal for 10% of the money in. Watch how this scales. The $750,000. This came in from 7 people. Yes, this was people in our network. It's a whole other video. We can get into how you raise capital. Trust me, find a good deal like this that's returning 15 to 20% per year on your investor's money, which this deal did, and most of these ones out there do when you do them right. If I came to you and I said, hey, you can get 15 to 20% per year on your money, and I can wipe out your income taxes for the remainder of your human existence, do you have $25,000 that you may want to invest into an apartment building and own this thing, actually own it? Of course you would. You'd consider it. It's either that or it's the stock market at 8% or sitting in your bank account at negative or doing nothing. So you're going to pull money diversified into real estate to earn 15 to 20% a year. And it's relatively risk adverse. It's an apartment building. It's cash flowing. People in it paying it every month. It's like a business. You're buying the business and you're wiping out taxes. So raising the capital is not very difficult when you have a good deal. So now we're up to 47 units. Keep going. 2019, we buy another 31 unit, $1,525,000, $350,000 in renovations, $200,000 in closing costs, all in just under $2.1 million. Take out $1,475,000 loan. The property did it, not us. Property got the loan. $600,000 in equity that we got to bring in. A lot of money. If you tried to do this on your own, you couldn't do it. You'd stop, right? We didn't. We brought in $60,000. We're the general partner. We get 40% of the deal, have 100% control. Now we bring in other people's money. This was 6 people came into that earning 18% a year on their money, and they wiped out their income tax. Pretty good deal. So now we're up to 78 units. Set aside the fear of raising capital, you guys. It's a skill set you learn, and if you have a right process, you'll never have to worry about it again. Trust me. You can try and do this on your own, which we did, and we only got so far. Then we wanted more. If you're trying to really grow this wealth for you and your family and do this the correct way, you need to learn how to find good deals, put the capital structure together. If you can do those 2 things, I mean, imagine it. If I could wipe out those roadblocks that most people have around finding good deals, right? Access to deal flow and access to capital. If you had $5 million liquid in your bank account right now and I had a flood of emails coming across your inbox with good quality deals every day, do you think you'd have a problem? Probably not. So access to capital, access to good flowing deals. Those are your 2 biggest roadblocks we solve. Okay, so let's keep going. Now we're up to 78 units. 2021, this is the ride. Because what we did is we went ahead and sold one of our 4plexes. Now to liquidate that, we had $900,000 in equity we took from that. Now we went out, bought 121 unit, bought 110 unit. All in $19 million on these. Reno $4 million. 1 in closing costs. You may be saying, Justin, how in the hell did you take these deals down? Here we go. So go out and get a loan of $16.8 million. Now, could we take that loan down alone? No, we could not, right? No, we could not. We needed co-partners with us. But this is where collaboration starts when you get into the bigger space. We were not the only general partner on this deal. We're not the only head honcho. Now we're partnering with a couple buddies of ours to now we can scale even further. It's all a collaboration sport because you're getting a piece of a much bigger pie. Ask yourself this question. We could stay right at these units right here, okay? We could stay right here at 20 units and $3.5 million and have 100% of it. Sweet. Or we can get to where we're at today and have 40% of 200 million. You do the math. If you know how to do this correctly, you can scale your wealth. If you don't do this correctly, it's when you don't. right? How much of Tesla does Elon Musk own? Less than 10%. How much of Amazon does Jeff Bezos own? Less than 15%. How much in NVIDIA does the CEO own? How much does Larry Ellison own of Oracle? Guys, they're using OPM, but they're doing it for companies. You're using OPM, other people's money, for apartments. Same thing, different assets. It's a skill set. So keep going here. 16.8 million. We had partners help us take down that loan. Now we bring in $7.2 million in down payment equity. You're like, holy crap. Yeah, holy crap. No, we're not bringing all that in on our own. We're bringing in $700K, but that's split with another partner. So we're really bringing in $350K. That's ours. They're bringing in the other $350. Now we're raising $6.5 million. Now with their talents and our talents in a good deal like this, now we can go raise this kind of capital through bigger sources because we have a runway, we have a resume. That's how you can play in this game. And we're co-partnering together. The deals make great sense. Raising the capital. This was raised by 30 investors and the deals made great sense. Check sizes anything between $25,000 to $1.8 million, all across the board. But the deals make sense. They wipe out taxes. They get great cash flow. Rock and roll. So keep going. In 2022, we bought a 210 unit. Same model, right? Same big model, big time model here, applied to all these other deals. 210 unit, then an 80 unit, then a 160, then a 220. Now we're at 980 unit. All with the same equity, guys. All we did is we pulled it out of those 20 units, moved it over into this game. 2024, we buy 144 unit, then another 20 unit. They're just under 1,200 units at that point, 1,143, approximately $200 million in asset. And today we're over 1,200. This is how we got there. It started with one condo, $100,000 in Murrieta, California, in the midst of the financial crisis. And if I would have stuck in my head because I was getting my ass handed to me in the financial crisis, nothing would have ever happened. But I didn't let that stop me. I didn't let that slow me down, right? You remember, you bring in the check equity or the sweat equity. You decide. If you're broke, you better have the sweat equity. If you have the capital and you don't know how to do it, you better go find somebody with the sweat equity. You bring the check. You bring the check, they bring the sweat. That's how you partner. That's how you grow. That's how this game, but it's a skill set. You got to learn it. If you want to do this and grow your family wealth, and maybe you don't want to go this big, maybe you don't, fine, totally cool. Get to 100 units, get to 50 units. You're still going to need OPM for that. And you can do it with your network if you build it right. And we show people how to do that. We have our network. It's all a collaborative sport. Stop trying to think you can do this alone. You're not going to lose control of these deals. In these deals, you have 100% control. 100% control. You may only have 40% of the cash flows, the profit, but you have 100% control in decision making. That's the key. That's the key. So hope this video helped illustrate this literally step by step in a way. And if you want to learn more, go watch my video about how to buy a 10 to 30 unit apartment building with as low as $30,000 out of pocket in the next 90 days. Click the link here in the description. It'll take you to that video. Watch that. And if you like what you see, you can come in and learn more. Would love that. Would really enjoy it. And like and comment on this video so it shares it, right? Please share and like this video so it gets out to as many people as possible so we can share how to do this and grow the wealth together. So I hope this helps. Until the next time, take care and happy investing.